Well, looking at the global economy, inflation remains sticky, central banks are tightening, and consumers' confidence low. Joining us now, we've got Rebecca Walser, president of Walser Wealth Management. Rebecca, great to have you here in studio with us.
Great to be here. Thank you, Brian, for having me.
Absolutely. Bringing some of that Florida energy here for us. Where are the biggest risks in the global economy, though, right now?
Well, I think the biggest unknown right now is this announcement that we got out of Johannesburg, obviously, of Saudi Arabia and the UAE joining the BRICS bloc. And, really focusing on that conference on a lot of bilateral trade and domestic currencies, which we know we saw in March, the first amount of currency transactions in China for the first time in Chinese yuan outside of U.S. dollars. So that was already alarming. The number of U.S. dollar-denominated bank reserves retrenching is alarming. The M2 money supply coming down, alarming. All of these things are macroeconomically, globally alarming. But I think that what was really interesting and telling, Brad, was when they said that Saudi Arabia and UAE aren't joining until January, it kind of gave them a framework of time to develop a framework with which the ultimate, which is really what I worry about, them announcing that they will start selling crude outside of U.S. dollar for the first time since 1974. That happens, and we have, potentially catastrophic dollar effects.
There doesn't seem to be an imminent sign that that is happening, to your point. And in the meantime, the U.S. economic data, as we've been discussing, has been pretty resilient. If you look at the Citi Economic Surprise Index, the rate at which our reports have been beating, and you compare that with the likes of the Eurozone, say, or the likes of China, although you can argue all day about Chinese economic data. But the point is, our data has been doing really well versus expectations.
Yes.
So how do you look at that data and sort of read the change in economic sentiment that we've seen in the U.S. this year?
Well, I think, Julie, the United States is always the last. All of these impacts, we look at Asia and we look at Europe specifically because they're leading indicators for what will eventually come to America. And that's simply a product of the fact that we are the largest GDP. We do have the most, we are it. We're obviously controlling the global reserve currency as well. So that obviously has given us a tremendous amount of benefits since 1944 Bretton Woods Agreement. So I think that I look at those things and America being so resilient kind of as a bifurcation of our economy. There's still a lot of haves, but there's also very much a lot of have-nots. And that's why people are so disjointed in hearing the good economic data and saying, but that's not me. I'm still feeling it in my pocket. To your point earlier about the student loans resuming next month, that's $5 billion a month of spending that can't go to service and can't go to goods. We have Gen Zers that graduated in, 2019, 2020 that have worked for 3.5 years and never even made a student loan payment. Have they budgeted for that? Did they plan on it because they expected this administration to potentially forgive some of that student loan debt? So maybe they didn't budget it or expect it to be less. So there's a lot of things that we can take away with the U.S. being resilient, but eventually, Julie, all things will eventually get to us, and we will have to have that reckoning here as well.
So with all of these factors on the table, what are your clients asking you right now? Where are you kind of positioning portfolios?
I think people are confused, right? Because they're seeing bad data, good data, bad data, good data. They're seeing Powell saying we have to raise, hawkish comments in Jackson Hole, but yet weakening and softening labor. And we're starting to see those things. But then also this week coming back and unemployment claims going down. So, there's such bifurcated data that people get confused. I think the thing to understand is there is an economic situation that has to come. We have to deal with the fact that we printed so much money and it has implicated inflation, obviously. But Powell has done the best he can. He's been able to really be aggressive because he's had labor as a stalwart. When we start to see labor softening, that's when we start to think that Powell has got to change his tune. So people are just wanting to, if it's not going to be a soft landing, is it going to be a soft landing? Can we just get through and can we get back to some level of normalcy? I think people are we're just all tired of it being so chaotic, right? And it has been, I think, since 2022, really, 2020 probably.